We actually added to PayPal this week, a new position for us, and we are really thinking about barbelling our portfolio. We still like technology. We particularly like some of the compelling names in healthcare, and we do like industrials, even though they have had as you mentioned, a tough week. For us, if we look out across the trade and look at things like energy, we've seen a lot of great gains in those stocks this year. They're just not as compelling for us in the back half of the year. So being able to barbell some of these cyclicals that think we'll get a lift from overall spend being improved here in the U.S. economy, along with, selective growth names, we think that's the right way to be positioned into some of this choppiness that I do think will persist over the course of the next couple of months.
What a week for media. IAC Chairman Barry Diller was on Squawk Box earlier this morning. Here's what he had to say about the media streaming landscape, starting with the AT&T Discovery deal, which was announced earlier this week. Hard to believe, but that happened this week.
The scrappy Mr. Zaslav gets to operate it, and basically Malone and the new houses get to control it. And I think it's certainly in better hands. How could it ever been in worse hands? Disney is certainly going to do okay. Whether, by the way, when you balance it all out 5-10 years from today, and you say what they gave up and what they received from the middleman to what they get in direct is ever going to actually pay off, it may just be survival for them. Netflix won this several years ago. They're the only ones who have the scale and the momentum to keep making these somewhat lunatic investments in programming. Brian Roberts and Comcast have a route to all markets. They've, I think, gone about this streaming thing smarter than anybody.
Barry Diller on all the names. And Mike, one of the interesting comments was that Netflix, he says, is the king and doesn't expect this new AT&T Discovery deal, even though he sounds positive about it and positive about Zaslav, to change that.
Yeah, I mean, certainly I think it's fair to agree that Netflix is basically the incumbent in the new world. But it's not entirely clear that they are really a world apart in terms of their capacity to spend on content, with the other big players now essentially fully committed. I don't know that we want to take the $20 billion that AT&T Warner Media Discovery is promising as being completely comparable to what the others are doing. It probably includes a lot of what they're already spending on. But nonetheless, I think what's interesting is that Netflix, the stock, has been almost exactly sideways for 10 months. And people just kind of get what they are, and everybody else is kind of trying to aspire to it. And Disney, it's fascinating what he says about that. I think it's true that that world of kind of living off of cable affiliate fees forever at ESPN and whatever is probably gone forever. But it is really a bet on franchises and intellectual property that only they own. So it's a matter of Netflix is the new TV. Disney Plus is essentially where you're going to get the leading character franchises in the world, Star Wars and Marvel and such.
But I thought it was interesting, Shannon, because implicit in what he was saying was to raise the question of whether these multiples will last forever, and saying, maybe Disney, this is a survival move as opposed to fully in due course replacing potential lost revenues. And the points about Comcast, our parent company, I thought also particularly interesting, because he was sort of commending the approach that hasn't been rewarded really by the market on Peacock, and the fact that Comcast offers quite a good hedge whatever happens in the media landscape, given that it's the last remaining player with the pipes and the content.
Well, I think it's the difference between, where we were at this point last year and where we are today. I mean, I think any company that you put in your streaming basket at this time last year was seen as a winner, because we were all going to be stuck in our houses and have full digital engagement over the course of the next who knows how long. And so now I do think that there is a bit of differentiation in how you deliver the streaming model. I think that this deal in particular between AT&T and Discovery is interesting. I wasn't all that blown away by Discovery Plus, and I love content, owning Netflix, Comcast, and Disney in my portfolio. But I think that over time, you do start to see some winners and losers. I think that companies need to balance what the spend is. You need to think about cash flow generation. I disagree on Disney. I think that Disney has the opportunity to really grow Disney Plus based on their parks cash flow, which is certainly going to come roaring back over the next year and a half or so. So I do think you need to be selective. I'm not any more interested in Discovery Plus than I was prior to this deal announcement, but I certainly think that there's going to be continued consolidation, and that we should be very thoughtful about some of the synergies that are being promised.
Shepard Smith here. Thanks for watching CNBC on YouTube.